I'm Sarah Borkson-Keto here in San Francisco for REITWorld 2018, NAREIT's annual conference. I'm joined today by Keith Cline, President and CEO of CorePoint Lodging. Welcome, Keith.
Thank you.
So it's been almost 6 months since CorePoint Lodging listed on the New York Stock Exchange as a standalone company. What have been the main priorities in that time?
Well, 2018 has been a pretty busy year for CorePoint Lodging. We have an investor deck that we posted after our earnings call yesterday for investors to take a look at. But in that deck, you'll see we outline our near-term strategies, which are really ensuring that our renovation properties get opened on a timely basis. We'll have every property open except for one in 2018. Getting our hurricane-affected properties back online as well. We had almost 3,000 rooms out of service in Q1 of 2018 because of Hurricane Irma, and have been working very hard to get those properties up and running. The third thing is really executing against our asset management strategy. Obviously, we sold the brand and our management company to Wyndham Hotels and Resorts back in May, and John Cantelli, our Chief Operating Officer and Head of Asset Management, has been working diligently on kind of market level asset management strategies to drive results across the portfolio, while we also monitor the integration and transition to Wyndham. It's a very different world, having run the brand a year ago, and now we're just the largest franchisee, so we're trying to ensure that nothing disrupts the activities of this portfolio.
And what progress has CorePoint made in terms of the repositioning of assets, and are those efforts starting to bear fruit?
Oh, absolutely. As we disclosed on our earnings call earlier this week, for the third quarter of 2018, the RevPAR from those repositioned properties is up about 15.6% on a year-over-year basis. So we're very pleased with the revenue performance that we're seeing out of those repositioned properties. We're still working through fine-tuning the cost model to get all the ROIs that we expect and the margin flow from those properties, but definitely more than pleased with the revenue and the market share that we're seeing.
And how would you describe operating fundamentals in the mid-scale and upper mid-scale segments?
You know, it's been very attractive for us. As we go into 2019, I view generally a very similar situation as we saw in 2018. However, CorePoint Lodging has some very unique catalysts for performance, given that we're cycling against a lot of rooms out of service in Q1 of 19. Right, we had quite a disruption in Q1 of 18 from the hurricane, so we'll benefit from that being open this year. We'll certainly benefit from the renovation properties that we're opening, continuing to ramp. And the one thing that the market is keenly focused on to figure out how to quantify is what's the benefit to CorePoint of being part of the Wyndham distribution platform. At the end of the first quarter next year, we'll be cutting over all of our revenue generating systems, the CRS, the PMS, revenue management, technology supporting our pricing is all cutting over, as well as all of the online distribution channels. So we're very curious to see what the network effect may be on this portfolio in 2019.
Keith, thank you so much for joining us.
Oh, my pleasure.
And for more on REITWorld 2018, be sure to visit NAREIT's website, REIT.com.